You know, we've had the conversations about, a lot of the trends that we've been seeing in retail got sped up this year because of the pandemic. What trends really stand out for you that you think are going to be significant drivers of retail going forward? And good morning, by the way.
Good morning. Obviously, you have to start with the shift to e-commerce. I mean, this is just massive. It was happening before, but there's no doubt it got tremendously accelerated. I think what happened now is people who weren't as prone to use e-commerce, they had to, because it was the safe way to buy things, and they found out not so bad. So a lot of that's going to stick. So you have in fact seen an acceleration towards e-commerce. Another big trend is the shift away from apparel, from clothing, into hard lines, electronics, other types of physical goods. And so apparel has been in long-term decline. And if you look at over a 10-year cycle, clothing is down. Not so much people are wearing, going out without any clothes on or wearing less clothes, but there's been a big casualization of the workforce, so you buy less expensive clothes. And then even for the same clothes, the average price point has declined with the advent of fast fashion and all the discounters taking huge market share. I mean, the biggest clothing sellers in the U.S. right now are Walmart, Target, and Amazon. So the average price point has declined. So what are people doing with that money? They're buying hard lines, they're buying electronics. And now in the pandemic, for the home. And, I, for one, I don't think I'm alone. I started learning more about how to bake. And now that I love the pathos and the chemistry of baking, I'm going to keep baking. So there's going to be a lot of shift, even more accelerated, away from apparel and towards home. You have the shift away from the department stores and towards the discount stores. That's continuing, only accelerated by the pandemic.
It's funny, I, as well, Jerry, have really taken up cooking over the past few weeks and months, only because of this lockdown. I will point out one clothing retailer that's done quite well, at least partially clothing, is L Brands. More than doubled this year, but that's because, of course, they don't sell office clothes, right? They sell maybe the less appropriate things you would wear to the office through Victoria's Secret, or the things that you would use at home, like Bath and Body Works. We had a guest on a little bit earlier, Steen Jakobsen, who said one of the big problems for retailers right now, Jerry, is that the logistics is so expensive. Shipping stuff, you can't find a truck out there. It's tough to get things on boats at a decent price. Do you see that kind of inflation for companies that need to ship their goods to people who now order everything on the internet?
Well, I think the real topic is that there's a negative arbitrage in the marginal profitability of an item that you sell and deliver to someone's home on the internet versus when the customer comes walking into the store and does all the transportation themselves and just picks it off the shelf and takes it home. And so for a lot of retailers, a lot of companies, this is the most frequent, by the way, assignment that I get at Storch Advisors to help people figure this out. For a lot of retailers, they have to sell twice as much on the internet, twice, to get the same marginal economics, the same marginal profitability as what they sell in store. Because you already have the stores, all the people are already there. And the customer does that last leg themselves. So that's really the biggest issue. And by the way, during the pandemic, FedEx and UPS, they've had capacity constraints, and they said, okay, let the market clear it, and they raised their prices. They put in big surcharges, so it costs more than it normally did. Eventually, that will equalize, that will come down. So I think over time, as the system gets built out, as e-commerce is a higher percentage of total sales, that penalty goes down, and that freight penalty goes down over a period of years, not instantly, and for some companies, what I like to look at is the margin pool. How many dollars of margin are in that shipment?
Right.
If you're sending someone, a pack of toilet paper, there's not a lot of margin, but it's bulky, so it's related to the cube more than anything else. But if it's a diamond ring, no problem, because you could, $1,000 ring, you could have $500 of margin in the thing. The transportation cost doesn't matter. But it does when it's only $1 or $2. And that's why you have to look at each retailer separately and say, who has best marginal economics? Who has the best, margin pool to ship that product to the home so that the shipping becomes less important? For a luxury retailer, it's not very important because the customers are spending a lot of money with a big margin rate. The shipping cost is trivial compared to the overall margin pool.
Yeah, hey, listen, I want to ask you, though, Jerry, if you go up and down the avenues here in New York, even across from Bloomberg headquarters, there's multiple retail stores that were here before the pandemic, and they're not anymore. Who takes advantage of that retail property on the other side of the pandemic? Who are the retailers that you think are going to be able to snap up some of those smaller locations or that really need more locations at this point, that there will be demand for their goods?
Right, we have to separate New York real estate from all the rest. It's very different in Manhattan than it is elsewhere in the world. For most of the United States, the winners are clear. It's Target, Walmart, Costco, these big discount chains. They have done fantastic, not only, by the way, on the internet, but a lot of times their store numbers have been up when you look at how they're doing, because people have had fewer places to go to, and they've been consolidating their trips, making big average ticket purchases when they go to those places. So those are our big winners. Other big winners are the home people, like Home Depot and Lowe's. These numbers have been phenomenal that they're reporting, and I don't think that's going to, soften, but it's not going to change in terms of a fundamental long-term trend, as we were discussing. Other winners, people like the dollar stores. I mean, Dollar General is just hitting it out of the park day after day, week after week. So is Family Dollar now that that they've got all the trends in their direction. So I think a lot of it's going to go to people like this. The mom and pops are getting crushed. I mean, they're absolutely getting crushed. I mean, if you only have a single store, you can't really, you have a limited line of offering. You've been killed by the pandemic. Maybe you weren't declared essential. Beyond that, you have capacity constraints. Meanwhile, you can't even afford to set up a really great internet site. And even if you could, you wouldn't be able to get the traffic to it. It could cost a fortune to pay Google and Facebook for the ads to get the traffic to